Again, this is Friday, February the 6th, and you can see we're in this channel right here. Now, we had a short print about a little before 8 o'clock in the morning. Didn't like this, and here's why. I would not have taken this trade for two reasons.
Today, I'm going to show you how to use very inexpensive trading tools and trade micros like a boss.
Welcome to HolyGrail Algo, simplified trading. Make sure to like, subscribe, and turn on the notifications. HolyGrail Algo is not liable for any loss or damages which may result directly or indirectly from such content.
Okay, let's take a look here. This is a chart with all of the indicators and all the tools fully loaded. You can see here we've got a dashboard on a couple of items right here. This is one that's movable. All of them can be moved in the template. But let's take a look here. So what we have here is we've got the channel breaks indicator, and that is this green and this red bottom band, and you'll see that they'll make different channels throughout the day. And as they walk these up, this is pre-market here. Now this chart is yesterday on the MNQ, which is February the 5th. And I want to kind of go through this so you can see what this looks like. We got the cumulative delta. We have our Holygrail Dashboard. This is our profit trailing strategy. Now, when you hit this, it's going to enter a trade. It's going to set the stops and the take profit according to whatever is set into the templates. And those can be changed and saved into new ones. And it does profit trailing, a unique system that's really cool. We also have our Trandband. That is this red and green band that runs right through the middle of the chart. We also have our long and short prints right here, and this is a short print that we got here. Let's break this down, and I want to show you the way that I would trade this. These triangles that you see, you'll see several of them here, and we'll go through this. These are alerts, and these are breaks when it breaks out of the channel breaks. And we show you a video when you sign up that you can set these alerts. There's 4 different types. There's break up, there's breakdown, and there's interchannel breakdowns and breakups. Now you can see this is 2 breakups on an interchannel that we got here about 6:40 in the morning. This is February the 5th. I would not have taken this trade for 2 reasons. One is it's below the trend band. I'm using that as a filter. And 2, it's a red candle. Now, the trend band not only does this band across your chart, but it also recolors the candles. If you notice that typically all the candles below this are going to be red, and when they get up to a certain level, they turn back green, and then when they go back down below again, it gets to a certain point, it's all calculated in, it's going to turn back red again. So they recolor the candles. So I use that coloring of the candle to help aid me into what I'm going to do. So in other words, my rule is I don't take a long on a red candle. And I also don't take a long or a short if it's touching the trend band. So this is my rule, and it works pretty well. You can see right here we got a print. This came up as an alert. It's a little pop-up alert that comes up. You can also make it into a sound. But this had broken out of the bottom of this channel, and I let it print the full candle, and I would have taken a short on this next one, which I did yesterday morning. Got a really nice trade. It popped all the way down here. A little bit later, still in pre-market, we got another one. It broke out of this channel, and look what happened. It broke right down here and got another nice trade. A little bit later, about an hour before the market opened, we got a break up right here, but you can see what happened. What we have here is we got the trend band, we got a red candle, didn't take that trade. And I'm using this again as a filter. The other thing we're doing is we're using the cumulative delta. Now, since I'm recording this without data running on here, you're not going to see this, but in a normal market, this is going to run tick by tick, and this delta is the imbalance or the difference between the buyers and the sellers. So what you want to do, if you're going to take a long, you want as many buyers going in as possible. Now, I typically trade on a 3-minute chart. But this works on any, we got other traders trading on a 1 minute, 2 minute, 5 minute, 10 minute. They're all different sizes, and it works on all of them, but the calculation is going to be a little different. I'm just saying for a 3 minute, I really like in a market, in the normal hours of the market, I like the cumulative delta to be in my favor by about 2,500 to 3,000. That's kind of like where I want it to be. Now in pre-market or after hours, this is probably not going to get to that level just for the simple fact that, well, there's just less volume volume outside the regular trading hours. So this is going to calculate a little bit lower. You can see what happened here. We had a breakdown right here. This gave me an alert. This was beautiful. It popped all the way down here and was just a beautiful short, but it met all criteria. It was a red candle. It's below the trend band, and at the time, the cumulative delta was up around 2,000 on here. So this was still a pretty nice trade. A little bit later, it broke above the trend band. Hadn't turned green yet, but it did break out of the top of this channel. I did not take this, and you can see why here. It's a red candle. I really want to take longs on green candles, and this didn't meet my criteria. Our long and short indicator had printed a short off of this candle right here. This was a beautiful trade to get in on the next one after on this one right here. This is this center candle right here. This was a beautiful trade right here, massive trade all the way down. And then a little bit later in the day, here at 11:20, you can see that we had a break up. It broke out of the top of this channel, but now this would have been a good trade. Nothing wrong with this trade whatsoever, but it just would have broken my rules, and they're typically not as good or strong. And again, with any indicator or indicators, they're not going to be perfect. Nothing in trading is perfect. By using some of these rules, you'll get better opportunities out of these. Now, if you trade this on a little bit different candle size, like say a 5-minute, your coloring is going to be a little bit different on these. So here's an overview of what all the trades we would have taken and would not have taken. You can see that we've got 4 really good trades right here, and we've got 3 that we should not have taken just because they didn't meet the criteria. So this is what they would look like and the rules that we would want to keep. Here is the MES also on February the 5th. This was yesterday at the time of this video. You can see the longs that we had one long in the afternoon. We had some of these shorts right here. And again, you can kind of look at this, and this is how we would trade. Same rules apply here. This is the MCL, micro oil, and I really like oil. You can see that it did the same thing. This again is February the 5th. You can see here in the morning that it showed some of these calls and signals on the chart, and the ones that we took and the ones that we didn't, because we kept the same rules. And it doesn't matter what instrument, we keep the same rules from instrument to instrument. And lastly is the MYM, the micro Dow. I really like this. You can see this is one of our alerts right here, what they look like when they pop up. And these are the trades that we would have taken and the trades that we would have not. The Dow did really good yesterday. Okay, this is a chart this morning, and I took trades on here, and I want to show you what I took on this one here. Now this is the MNQ also. Same thing, it's on a 3-minute chart. Now this is February the 6th. This is Friday morning, and we had this short, a breakdown call out of here, and we also had a short print right here, but this was right at 9:30. I didn't get in this trade because I typically am not going to enter a trade 5 minutes before the market open. I want the market to get in and get settled down and do what it does. You can see what happened here. It had broken up. I got a breakup alert on this candle, but since it was red, I didn't enter. But look what happened here. We printed a long, we were in a long condition here. We broke out of the channel. We broke above the trend band. We got a long print, and the cumulative delta that time was over 3,000. In fact, I think it was running around 4,500 this morning. Now, I took this trade. Now, it pulled back on me, but then it pushed back up and got a nice trade out of this. A little bit later in the morning, you can see what happened here. I didn't take this trade because my rule is I never touch a trade when the candles touch the trend band, and I wanted to break up out of the bottom of this channel. You can see right here, this wick down and in here. So I'm waiting for a break above this. Now this long printed, and then this would have been okay. I didn't take this trade, but this would have been a good trade right here, because what happened was it did 2 things. We're in a long condition. We got a green candle, we got a long print, and it broke above the trend band, and it broke out of the channel. This is a 50-point trade. So this is pretty good. A little bit later in the morning here, still before lunch, we got a break up. Didn't take it, but right here would have been a good one, because it did, again, the same thing. We are in a long condition. We're still in this long condition. We're above the trend band. We broke out of the channel, and it pushed up, and 55, I mean, it depends on how far you want to ride that. This was really a monster trade right here. So what we're doing is we're using all of these indicators as a complete set. We can use the HolyGrail Dashboard to enter our trades with, provided that, you know, the risk to reward in this and the profit trailing is good. This would have been a really good trade right here. And again, I hit profit on I hit my profit goal this morning. So I was trading the MYM, the MES, and the MNQ, and I did really well this morning, and then I stopped trading, and it's Friday, so I typically don't trade real late on a Friday anyway. That's just my rules. I've got rules that I do, and I really like trading micros. It's low risk, and you can get some pretty good trades out of this. There's higher volume on the micros versus the full-size minis. This is how we use this, and these are $49 for the entire year. It's an incredible value. You know, you're talking less than $1 a day to be able to trade all of these for the entire year, and these give you a valuable tool. Here is the MES on the same day. This is Friday, February the 6th, and you can see what happened here. This is right just after the market open. That was the market open candle. We had a really nice long print. I did not take this because I really hate taking that first candle of a trade, but look what happened here. We had a nice breakup. I got in here. It had a little pullback, but it really pushed up. Got a really nice trade out of this on the MES. What happened here was, and let's go through this real quick. This is pretty important. We had breakups, but look what happened. I want a candle that completely breaks out of here, and we didn't get that. It come right back into the trend, or into this right here. Still above the trend, but it was still inside the channel. Same thing here. Now this one here, this was a nice trade, because if you got in on this, what you would have got in on this one right here, it really pushed. Same thing here. We had a nice trade here. This is what I would call a confirmation candle right here, and to take this trade. Same thing here. And it got a little bit weaker as we went up the channel, but you can see how we take these trades. And again, nothing is perfect, but this gives you the best opportunities to take these trades. And what we want to do is we want to make sure the cumulative delta is in our favor. We want to make sure we're above the trend band, and we want to make sure that I like to have it where I'm out of the channels, off the trend band, and the right color of candle. I got the cumulative delta, and I like to be in a long or a short condition for that to happen. Okay, here is the MYM. This is another one that I took a really nice trade on this morning. Again, this is Friday, February the 6th, and you can see we're in this channel right here. Now, we had a short print about a little before 8 o'clock in the morning. Didn't like this, and here's why. We were above the trend band. Did break down, got a short call here, but what we don't want to do is trade if we're above that trend right there. So, and it would have been a good trade. There was quite a bit of points right here that could have been made on this. It's just typically not my, it just kind of breaks my rules. It still would have been a good trade, but you can see we kind of broke up here. It's a little weak, and then we got a long print. Now this would have been a good trade. Any of these trades would have been good because you'd have had a little bit of pullback right here on this candle here. But once the market opened, it really shot up. Now we got a breakup alert on here, and I got in this trade right here, and I rode this thing up. So this one here was a really nice trade that we took this morning, and pretty much it just took off and went vertical all day. This is how we trade this. I've got these rules that I personally use, and I know a lot of other traders using these have got their own as well. But this is how we use it. We use it as a full set, and we use the long and short call indicator, and we use the channel, the HGA or HolyGrail Algo channel breaks that makes the signals, but then we use the cumulative delta and we use the trend band as filters. In other words, if we don't want to take that trade, this is going to have to filter whether we take the trade or not.
Each of our trading tools are only $49 a year. It's an incredible value, and used together, it creates a complete trading system. I want to also encourage you to join our Discord. There in our Discord, we have hundreds of users that are already using these products with their own style of trading and different instruments that they use. And I'll have a link for the Discord in the description of this video below. If you like what we're doing and think this is cool, like it and subscribe, and we'll continue to do this. I want to thank everybody for watching. I want to wish happy trading, and we'll catch you in the next video.